Hi, it's Tom Toole here with Remax Mainline, coming to you with another quick video message to help you stay ahead of and informed about the local real estate market in the greater Philadelphia area. I like to answer this question periodically for everyone that follows me out there because it's the biggest question in the real estate market, and that is, how's the market? We all know that the answer to that is that it depends if you're looking to buy, sell, rent, or invest. So let's see what's been happening with the market through the end of June 2013, and we can talk about each individual segment: buying, selling, renting, and investing. So year to date, what we've seen in Philadelphia, Delaware, Montgomery, and Chester counties is that average sale prices are up 1.95% to 7.09%. Obviously, this is going to vary based on your local market, which is why we're just talking about the ranges. The median sale price is up 2.36% to 3.88%. I find that the median is a much better barometer of the market because if you're talking about a home in Philadelphia or in Upper Darby or Coatesville, there are going to be some lower sale prices there than when you get into the main line, Lower Marion, Radnor Township, Tredeffert, Easttown, and there's areas in between like Westchester and Newtown Square. So the median really gives us an idea of what's happening locally, which is really important as far as the local trends. The other big change we've seen in the market, besides prices going up since last year, is that when your home is priced correctly, sellers are getting within 5.9 to 9.6% of their asking price. So you're getting much closer to your asking price than you have in the past. You're not getting as many lowball offers as even what was happening in 2012. And most importantly, if a home's priced right, buyers are not afraid to pay full price or even above the asking price if they really want it. The number of homes that have sold this year are up 11.88 to 19.83%. So seeing that home sales are up, prices are up, and you're getting closer to your asking price, what does this all mean? If you're a seller, the key here is the market has momentum right now. Inventory is very low. Right now we're seeing on average about a 6-month supply of properties available. This time last year we were looking at a 9-month supply, so that's much less. Now we're not quite at the seller's market base inventory levels, which NAR, the National Association of Realtors, and other statistical reporting agencies, they believe that between a 4 and 5 month supply is a true seller's market. I can tell you locally here, market conditions absolutely favor the seller, and then it becomes more about positioning than anything else. So knowing that there's low inventory, prices are up, and even though interest rates have creeped up a little bit, they haven't gone to a really high level. We're still in the mid-4s. And most importantly, there's a lot of buyers that are out there right now that are serious about buying a property that lost out on something in the spring because inventory is very lean right now. So if you're thinking about selling, now is a time where you can really capitalize on the market when you take inventory of the competing listings around you. Buyers, what does this mean for you? Well, as you know, 2013 has been tough on buyers. We've seen a lot of buyers lose properties because of multiple bids. We've seen them get priced out of the market. If you find something that you feel is a very good or a fair value and you like the home, knowing that inventory is really lean right now and you'd be comfortable moving in there, you may want to pull the trigger on it now before rates go up even further or prices continue to increase. What's equally important to the price is your interest rate. Buying the same home at a 3.5% rate, which we saw at the end of the spring in May and June, versus where rates are now about 4.5%, even if you paid more for a property, you'd be saving money long term. So I'd hate to see rates increase on you while you try to figure out what's happening in the market and see if the market's going to pull back a bit. Whether or not that happens, I really don't see rates going down to those very low historic levels that we saw in the mid-3s. Investors, the answer is always the same for you, and that's your property has to cash flow and make sense for you. You don't want to be bringing money to the table each month to keep it moving along with your rental income. It's really going to depend on if the numbers work for you or not. So, in summation, sellers, don't delay. Market conditions are ripe for you to capitalize. Buyers, you could see an even more challenging market come the fourth quarter of 2013 and the beginning of 2014. So if you find something that works for you, you may not want to pass on it, knowing that a lot of people have missed opportunities so far this year. And investors, The numbers have to work for you, no matter what the market conditions are. That's what's happening through June in the greater Philadelphia area. I hope you find this information helpful. If you have questions, call me in my office, 610-692-6976. Check out my website, tomtoole.com. And remember, I'm here and ready to serve. It's Tom Toole with Remax Mainline. Thanks for your time, and I'll talk to you soon.